I'm coming from the perspective of what BCs have been doing till now. Of course, the set of beneficiaries who are likely to come in the recent schemes being talked about are of course not of that category. They are far higher than that. But we are talking of typically a below poverty line beneficiary who BCs have been serving in the villages. He is a person who's just short of being destitute and is just surviving day to day. Even Narega is finally paying him 100 rupees a day for a family of 5. That's a very small sum of money. So money comes in, he works, money comes in, he withdraws the money to live. So the usage is 100%. It's no different. Over a period in time, of course, once he gets used to dealing with the bank, and banks are coming up with other schemes, government is coming up with other schemes which are relevant for this customer, like the Rashtriya Swasthya Bima Yojana, which is a health insurance program for the family, very small sum, 30,000 rupees in a year, but very relevant for that person. A small life insurance product for that. Reserve Bank and banks have been trying to roll out a need-based credit for this customer, 500 rupee, not a very big sum of money if you see from that perspective, but very useful for that person if he is out of job for 2 days. He needs some money to survive or has some health incident or something. So banks are coming up with these products, and the fact that the BC, the agent, is stationed in the village is somebody from the village with which that segment of people are comfortable with.
Sure.
And he does a lot of formal, informal education with the customers to say what more they can do with this system. That helps slowly the customer over a period of a year to 2 years to transition into from just withdrawing the wages or benefit to also start availing of other products.
Sure. Mr. Mundra, what sort of innovation is now required? Because these are a different set of customers that we're talking about. They're semi-urban or in fact completely rural in certain cases. So what sort of innovation would be required at a bank's end to ensure that they start interacting and transacting more?
See, as Manish also mentioned, the first foundation was the having an account. Now you should be able to introduce more products on these accounts, which can be in the shape of course, there is a normal account, then there is a credit facility, maybe there is an overdraft, there can be a micro insurance. To provide another avenue of saving and investment, there can be special mutual fund products. These are the kind of things which will come. That is on the product range. Other thing which is required and which will get completed once this Aadhaar thing is there, and there is a bridge for Aadhaar payment. Then presently if there is a BC network, it is interoperable within the bank. Like one BC, my one BC point customer of my another BC point can come and operate. But in the ultimate end, the whole country will be one network. It means a client of BC of any bank can operate with BC of any other bank. That will be in the last end, that is how it will work. So that will be the last point of it. But coming to again, I mean to say, it is always easy to be skeptical about anything in the beginning. But you tell me, if you look 20 years back in this very country, where were the mutual fund investors in large number? Where were the home loan taker in large number? Where was the vehicle loan was a normal banking product? But in span of 2 decades, today you see, it has become one of the largest segments.
So how much time are we talking about now before things really start taking off at the rural level, where banks start seeing merit in going through that extra last mile, where you have to innovate more, you have to spend more, you have to find out the right BC, get the connects in place? So how many years down the line will we actually see genuine market forces driven innovation at that last level?
See, things happen used to at a slower pace in the past. Whether it is banking or anything else, the time span is getting shortening. As I said, if we took 2 decades to really penetrate the retail market, I would sense in next 5 years it will be an entirely different scenario.
Okay, Madan, what do you think? I mean, what are we looking at over the next couple of months, over the next 1 year, as this whole benefits program is rolled out by the government?
No, I think there is this urgency as far as the government is concerned to try and transfer all the benefits in the form of cash and use this particular route. But I think we have to be careful once, as I mentioned earlier, when you're going from kind to cash, and also in terms of throwing more banking products on the customers. I think one will have to be a bit careful about it, because we have seen that even in case of regular customers, there's been this case of mis-selling of products, especially of insurance mutual funds. So as of now, I think it will make sense that when the banks are trying to cross-sell products, keep it within the banking product range and not really go into things which are more sophisticated, which requires a different kind of an approach, and probably a lot of education too.
Okay, Manish?
See, the biggest innovation, if you ask me, which will drive this market going forward, is going to be what approach the bank takes, active or passive. On one dimension, let's say we are moving away from a customer which was a below poverty line customer. All segments of beneficiaries are going to come into the fold. They are far more mature in terms of their engagement with the system and all. They know banking, they are not rural strictly, they are semi-urban also, and they understand banking. On the other hand, while we have architected something from the side of the government, from the customer side, we have as yet not thought about it, that why would the customer do this and with whom the customer will do this. So, if you go back into the even banking history, the retail business of banks grew when banks started, seeking out the customer. Two-wheeler loan, car loans, housing loans. Banks went out with the right partner, the direct sale agents, and completed the process and did that. MFI industry, forgetting the other discussions about the credit side, they sought out the customer. What did the customer want? Group loans, the right customer, and they went out and the business grew. Similarly here, if banks, and I will stay with first the cash transfers, the banks will have to show that activism to say, I will seek out the customer, I will do that seeding, I will link it, and I will make sure the customer deals with me. Of course, there is a business model discussion on fair price to be paid to the banks and all, but the active banks will succeed. Same way on the product side.
Because you start forming a customer base, which then can graduate into
yes, and nobody says the second product after the cash transfers has to be credit. There's enough experience literature to say the focused savings, the recurring deposit works best for this customer. There are enough products, even insurance, which banks are selling now, they can sell to this customer. Credit can be, if that's the worry, right? Although, like Mr. Mundra also said, not that poor is proving out to be a bad credit risk, but still, right? There's so much that can be done. The active versus passive, that will decide which bank does more.
Well, we are hoping for the best. It's an optimistic thought, and thanks so much for joining us on this discussion on the panel. Thanks to all our viewers for watching.